Good afternoon, Fort McMurray. I'm Melanie Galea from Remax Fort McMurray, and I'm one of the co-hosts of Let's Talk Lending, and I'm with
Barb Pinsent, the Mortgage Center We Connect.
Awesome. So, Barb, how long do you think we've been doing these little videos now? You think a year and a half now?
Yep, for sure. It's been at least that long. Seems like only yesterday, and I'm amazed that here I am, here you are, still doing them. It's been great.
Yeah,
Took
I think
me out
so
of my
too.
comfort zone, as I'm sure you know, but I am feeling more and more comfortable with it all of the time. So
I love it. Okay, so we get together 8 times a year to have these little video chats because the Bank of Canada rate has an announcement 8 times a year on what it's doing with the rate. So, Bob, what's going on?
Well, no change again this morning. There was some speculation that maybe they would lower it again, but they really don't want to do that. So same, their overnight lending rate is still at 0.25%, which means prime lending is not going to change. And they've said that they don't expect that they will change prime, move it up until sometime in 2023. So, they do say things and then the economy takes a spin and things, if things start going better, then, they expect that they will, but we have a long way to get there because our job numbers, lots of people have lost jobs due to COVID and we've got a long way to go. So I don't expect that we will see variable rates rise anytime soon. Not the same for fixed rates though.
Gotcha. Okay. Yeah. So if you have a question, you can type it into the chat. I will make sure that these questions get answered for you. Okay. And then, so Barb, so we decided that this episode, we were going to talk about rates though, because there's some, I don't want to say miscommunications or anything like that, but what is going on? Like, what is legit? Because I'm hearing that rates are starting to go up, but share with me what actually is happening right now.
Okay. And rates are going up, but it's the fixed rates that we're seeing move, not the variable rate. So, our meeting here typically we're here to talk about the variable rate, the Bank of Canada overnight rate. Fixed rates have gone up, and probably within the last couple of weeks, we've seen some increases. More the 5-year rate than anything else, but definitely there have been some increases in the 5-year rate. And the two are monitored by different measures. Different things cause the variable rate to change than does the fixed rate. And so that's, like you hear, rates aren't going up. They're not going to go up. Well, I just said the government is, not expecting to raise rates until 2023, but that's the variable rate, not fixed rates. And fixed rates are affected by bond yields, and bond yields are going up when one goes up, the other does. They go hand in hand.
Great. Gotcha. Okay, so you have a little presentation for us. Why don't we, we're going
okay, let me just
up our game here.
Just give me a moment here. I'll share my screen. And this is my first go at this, so forgive me here as I get this all figured out, because now I don't know where it is I need to go, Melanie, to share my screen.
Okay, at the bottom it says plus with the share screen sign.
Oh, I got to go back over here. That's why. 2 monitors going here. So
there we go.
Okay, share screen, share, and I'll just go into presenter mode here. And if you would tell me how that looks, Melanie.
You're not done yet, though. You're not sharing your screen
yet. Exactly. I'm not sharing yet?
Nope.
Okay. Share.
This presentation is so worth the wait here. Here we go. We got it. All right, Barb, you're on, okay?
Review. Okay, so you have heard that rates are going up, and I'm here to tell you that some of them are, but not all are.
Barb, you're not yet into the presenter mode, though. You're in the presenter mode, but you need to use slideshow.
Thank you so much, Melanie.
There we go. Okay, awesome. You're rocking that. You're good.
All right. So now, did I just bugger that up again? I
did.
I don't know why.
Don't press that. You want to keep sharing.
Yeah, I know. Why is it not letting me share? I'm so sorry, everyone.
No, don't do that, Barb. Listen, okay, don't do that. You are sharing your screen right now. You've just got that one screen. You need to move it back to the other video screen. Use that one back to the other screen. Yeah.
It won't let me. So okay,
yeah, go let it down.
Okay.
And then that's got to go down to.
Oh,
or pick your presentation. Nope. No. Put that down.
Put it down.
Put it down. Put the other one down too. There you go.
Okay. Many apologies. So not all rates going up, as I said. Fixed rates are, and because they follow the bond market. So it's in, responding to vaccines, government stimulus here in Fort McMurray in Canada, and the U.S. economy forecast is better than was expected. So all of that combined is why we are seeing the fixed rates go up. And again, it's the 5-year term. The shorter terms have not yet been affected. It's the 5-year pretty much that we've seen gone up. Variable rates, again, mentioned earlier, I maybe said too much earlier, but they have not gone up. Bank of Canada had their announcement today, and they are not changing their overnight lending rate. Therefore, variable rates will remain the same. And I, again, did say that not till 2022, end of 2022, end of 2023, will we see any change to variable rate mortgages.
Well, Barb, why do you think that is? If you could just go back to that screen just for a second, just by hitting the backwards button, like why so far out?
Because there have been so many COVID, so many job losses, and so the economy, is recovering in some sectors, but not all. There were, a lot of job losses. So, inflation is nowhere near where they want it to be, and if they put rates up, it's going to slow inflation down even more if they put the variable rate up. And they don't want that happening. If anything, they want some stimulation and want to see, more spending, that sort of a thing. And the higher rates are, the lower, or the less people spend money. So even though, the fixed rate has gone up, again, that's because of bond yields, nothing to do with the economy as a whole, again, different measures always. So that's why they're saying that we likely will not see an increase. And the government's been doing a lot of stimulus spending to keep things going, because they don't want things looking like they did right during the Great Depression. So, they're buying up bonds all of the time. They're doing what they need to do to keep things from being as awful as they could be, were they not doing that.
Gotcha. Okay, cool.
Okay. And so then I've just done some numbers here so you can see what the math looks like. And these rates are not, don't focus on the rate. I just want you to see the difference between the two. Rates have gone up by probably 0.5 percentage point, and that's what this represents. And that, again, that's the 5-year fixed. So $500,000 would give you a monthly payment, would have given you at 1.69 a monthly payment of $2,043.22. If you're now going to have to pay 2.19% for your 5-year rate, and that's a little on the higher side, but again, like I said, don't focus on the rates. Payment of $2163.38. So there is a difference there, but and everyone's different in terms of what they want to see and don't want to see. But in my view, $120 a month is not that very bad, not so very bad. But you want to be aware of it, because obviously it affects budgeting.
Absolutely, it does. I mean, $120 a month, that could be a family's dinner out.
Could,
right?
Yeah. So it does make a difference, and there are, you can get rates held. So, most lenders will commit a certain rate to you. They're probably not going to give you a rate that they would give if they have an offer in place that's, got a closing date of 30 to 60 days away from now. But you can get rates locked in for 120 days with most lenders. So, now might be the time to do that, to lock yourself into that lower rate should they continue to go up. So that's, something that people could take opportunity take the opportunity to do if they're interested in doing that. And what that means is an application, credit file. It's not just a simple matter of, this is their rate and there are some steps that need to be taken to get that rate locked in for you. So if you're thinking about buying in the next little while, you definitely want to do that. Reach out to your mortgage broker, your mortgage specialist, to me, get the rate out now so that if rates do go up, at least your rate's not going to be any higher than the rate that gets booked for you.
Awesome.
Okay. And no change to the amount of mortgage it is that you would qualify for, even though the 5-year rates have gone up some, because we're still using that bank account or the qualifying rate, the stress test, to verify and to see what it is that you qualify for. So we still use 4.79 to do our math, or 2% above the contract rate, depending on which is the higher. So qualifying criteria hasn't changed.
Okay.
Yeah. And that's pretty much all I wanted to say about rates. I'm not sure, Melanie, if you have any questions or if anybody's asked questions there and want answers to them.
Nothing mind right now. So I will talk about, let's get through these couple slides and then I'll talk about just about what's going on with the market a little bit. And so you want help, you can go to the letstalklending.com. This is where you can get a hold of Barb and myself on Facebook and Instagram. And then if you want to take that down and that's a great slide. Actually, you can stop sharing now, Barb. And then what we'll do is we'll talk about a couple things here. So some of the things is what's going on with the market, because right now, what I can tell you is that I am seeing more sale over 600,000 than I've seen in a really long time. So just as an example, I'm just gonna share verbally. I can't share the screen that I've got going on, but so this month there have been 22 sales so far, and 11 of those sales are over $600,000.
Yeah, it's been a while.
It's crazy, right? So what we're going to see is that average price go up. And that's why, because the confidence in the market right now is really good. The inventory is still low. Inventory is still under 200 single family homes in the entire city, so I'm seeing more multiple offers. So I can't stress enough the importance of making sure that you are pre-approved, not just get pre-approved, but be pre-approved, because you could be in a situation that you have to jump. So here's what I'm going to see. I'm going to see the days on market come down. This is my prediction over the next few months. We're also going to see the sale to list price ratio go up. So that means that we're getting closer sale to list. We're going to start seeing some stuff. So I've already seen some properties sell over list. So you have to be ready. You have to be ready. The other thing that I'm seeing that I haven't seen in a long time is a house of cards, where I'm involved in that house of cards. There's 4 properties involved. And it's the craziest thing that I've seen in a really long time. And I'm lucky enough, I'm the buyer at the end and I'm the seller at the end. So and we've got a great train of agents along the way to help make that work, which is really, I love working in co-opetition with other agents. It's so important. So it could be a good time to sell, so buyers, I think the new swear word is patience. You have to be ready. You have to make sure that you have everything together to help yourself make things easier with your favorite mortgage broker, which is the other way.
And I'll do that, yeah.
And if you haven't chosen your real estate agent, pick me. I've been selling real estate here since 2007, and I am very experienced when it comes to working on multiple offers and those sorts of things. I got a couple tricks up my trade about those sort of things. So if you got questions, we can help you. And the best place to get a hold of us is going to that letstalklending.com, because both Barb and I instantly get a message about that. So we're going to meet again. And I think, is it April the next date, Barb? I think maybe it's sometime in April that we're going to meet again. And yeah, so ladies and gentlemen, welcome to the early spring market in Fort McMurray. Yay. Yay, yay, yay. And if we can be of service to you, we'd really appreciate that. So Barb, thanks for the quick update and the education. I appreciate you being my partner on Let's Talk Lending.
Thank you. And I hope everyone is not too offended by my ineptitude with programs, but I appreciate your patience. Much appreciated. Next time will be better.
All right, well, we'll give our boss to self-depreciation. That is someone that's very humble, but very, very good at her job. And don't let the technical difficulties let you think otherwise. Anyway, Fort McMurray, happy spring. We are almost there. The clocks go forward this week, or do they go back? Yeah, they go forward this week. So we're going to see more daylight. And happy selling. If we can help you in any way, thanks so much. Please share this video, tag a friend, and thanks for watching. Thanks, Barb.
Thanks. Take care.